Hello everyone. A stock exchange is the heart of a nation's financial system. Here, securities like stocks and bonds are bought and sold, connecting businesses in need of capital with investors looking to grow their wealth. It is a marketplace with bustling trading floors, digital ticker boards, and modern electronic systems all working in tandem to drive economic progress. In this video, I'll take you through the fascinating journey of India's stock exchanges from humble, informal beginnings to a sophisticated, globally integrated financial ecosystem. From Banyan trees to blockchain, here is the evolution of India's capital markets. We will start with the introduction of stock exchanges and see their key aspects and SEBI approved active and inactive exchanges in India. We will then traverse through the journey and see seven phases of Indian stock exchanges spanning around 2 centuries. And finally, I'll share my closing remarks on this amazing journey of stock exchanges of India. So, a stock exchange is a regulated marketplace where buyers and sellers come together to trade securities such as shares of publicly listed companies, that is, stocks, bonds, and other financial instruments like derivatives and ETFs. Think of it as an organized platform that facilitates the interaction between those who want to invest and those who need capital. There are eight key aspects of stock exchanges: centralized marketplace, liquidity, price discovery, capital formation, transparency, regulation, efficiency, and economic indicator. Warren Buffett's famous quote, someone sitting in the shade today because someone planted a tree a long time ago, literally perfectly fits the Indian stock exchange. At the moment, there are eight active stock exchanges in India. The primary active trading in equity and derivatives in India is now concentrated on BSE and NSE, with MSE trying to catch them, while MCX, NCDEX, and ICEX handle commodity derivatives. And India INX and NSE IFSC cater to the international segment in Gift City. Over the last 10 to 15 years, 21 regional exchanges become non operational and are de-recognized due to the introduction of a stricter regulation by SEBI, particularly regarding minimum net worth and trading turnover. Here is the list of those 21 stock exchanges. So let's now start this journey of Indian stock exchanges. It has seven phases. It all started in the 18th century and known as the early days. Next is the birth of formal exchanges, which took place in late 19th century, followed by the post-independence and regulation in mid 20th century. In early 1990s, India saw the dawn of modernization, followed by the electronic revolution and regulatory evolution in the late 1990s and early 21st century. The next phase was the rise of new exchanges and market diversification in the mid to late 2000s. And finally, here we are in the consolidation and current landscape. Let's briefly touch upon each of these phases. The roots of Indian stock market can be traced back to the era of the East India Company. It was during this time that trading in loan securities began, marking the first sign of organized financial activity in the country. This was not a formal market, but it laid the groundwork for what was to come. By the 1830s, corporate share trading started taking shape in Mumbai. Shares of banks and cotton presses were among the earliest to be traded, yet there was no trading floor or stock tickers. Brokers met informally under a banyan tree near Mumbai's town hall, an iconic image that symbolizes the modest yet spirited origin of India's stock trading. These gatherings were the seeds from which India's formal stock market would eventually grow. Moving on to the next phase, the need for structure led to the formation of the Native Share and Stockbrokers Association in 1875, India's first formal stock exchange, which would later be known as the Bombay Stock Exchange (BSE). Pioneers like Premchand Roychand played a crucial role in formalizing trading practices and introducing rules and systems that brought discipline to the market. Trading still happened on the floor using the open outcry method, where brokers shouted bids and offers. But the shift from informal gathering to a recognized exchange marked a critical transformation. Around the same time, other regional exchanges began to emerge, like Ahmedabad in 1874, Calcutta in 1908, and Madras soon after, each serving industries prominent in their region, such as textiles, jute, and shipping. With India's independence came the need for stronger regulatory oversight. The Securities Contracts Regulation Act of 1956 provided the first legal framework for the operation of stock exchanges in independent India. It introduced regulations for trading practices and ensured exchanges functioned within a defined structure. Over the next few decades, several more regional exchanges were set up across the country. However, challenges like lack of transparency, slow trade execution, and limited investor protection began to emerge, highlighting the need to highlighting the need for reform and modernization. Moving on, the real transformation began in the early 1990s with the establishment of the National Stock Exchange, that is NSE, in 1992. Backed by a vision to bring transparency, efficiency, and nationwide access to capital markets, the NSE was a game changer. Unlike traditional flow trading, it introduced screen based electronic trading, eliminating the need for physical presence and enabling faster and more reliable transactions. The NSE commenced operation in 1994, beginning with the wholesale debt market and later launching the equity segment. This shift democratized access to the market and raised the bar for how trading should be conducted in India. In response to the NSE's success, the BSE launched its own electronic platform, the Bolt system, which stands for BSE Online Trading, ushering a new era of digital trading. At the same time, regulatory oversight was significantly strengthened with the growing role of SEBI, that is Securities and Exchange Board of India, which was established to protect investors and ensure the integrity of the financial markets. SEBI introduced numerous reforms from stricter listing norms to enhanced disclosure requirement. One major structure reform was the demutualization of stock exchanges, separating ownership from management to eliminate conflicts of interest and improve governance. This era also saw the introduction of derivatives trading, offering new instruments like futures and options that allowed investors to hedge risk or speculate more effectively. As the financial system matured, new types of exchanges emerged. The multi commodity exchange MCX and the NCDEX provided platforms for trading commodities like gold, crude oil, and agricultural products, offering farmers, producers, and investors new ways to manage price risk. Later, the MSC was introduced to broaden access to equity and currency trading. At an even more ambitious scale, the India INX and NSC IFSC were launched at Gift City, an international financial service center, with the aim of attracting global investors and integrating India's capital markets with the world. Moving on, the despite the rise of new exchanges, many older regional exchanges couldn't keep up with modern regulatory and technology standards. With declining volumes and increasing compliance burdens, several of them were de-recognized by SEBI. Today, the Indian stock market is primarily dominated by BSE and NSE, which together account for the vast majority of trading activity in the country. India's stock market has seen tremendous growth in market capitalization, investor participation, and technological innovation. From mobile trading apps to AI powered surveillance system, the exchange continues to evolve to meet the needs of a growing and dynamic investor base. To conclude, from informal trades under a banyan tree to hosting high frequency trading in a global financial hub, the journey of Indian stock exchanges has been nothing short of remarkable. Each phase, from colonial era beginnings to post liberalization transformation, has contributed to building a market infrastructure that is now among the most advanced in the world. As we look ahead, the future of India's capital markets will be shaped by emerging technologies, greater retail participation, and a continued emphasis on transparency and regulation. Stock exchanges will remain at the core of India's economic engine, channeling capital, enabling growth, and empowering investors across this country. The story of Indian stock exchanges is a testament to resilience, innovation, and the enduring spirit of enterprise. That is all from my side in this video. I hope you have learned something new today. Thank you for watching. Please like, comment, share, and subscribe. Goodbye for now.